Hello and welcome back to the lesson. Today we are going to distinguish between auditing and accounting. Auditing and accounting. These are both essential components of the financial reporting process, but they serve distinct purposes and have different roles. We all know that accounting is a process of identifying, summarizing, reporting, recording, and interpreting of economic information so as to allow the users to make informed decisions. Auditing, on the other hand, is the systematic and independent examination of the financial records of an organization to ascertain the accuracy, to ascertain their compliance with the laws and regulations, and to ascertain the reliability and fairness. Do you understand? So in distinguishing the two, one distinction can be on the basis of definition. Definition. Defining. Definition. You can distinguish auditing and accounting by just defining the terms. And you have said that these are both essential components of the financial reporting process. I've defined the two. Then another basis for distinction is the purpose. Purpose. What is the purpose of accounting? What is the purpose of auditing? Now, the primary goal of accounting is to identify, to record, to classify, summarize, and communicate financial information about a business or an organization. To account is to record, to identify, to classify. In accounting, we summarize information. Then that information is communicated so that the users can interpret it and make their own informed decisions. That is the purpose of accounting. Now, the purpose of auditing, the primary goal of auditing is to provide an independent and objective assessment of the fairness and reliability of an organization's financial statements. The primary goal of auditing is to provide an independent and objective assessment. So an auditor, after the records have been prepared by the accountant, the auditor is required to carry out an independent assessment of such records in order to ascertain their fairness and ability. So that is another distinction based on purpose. The two can be distinguished based on the process. Process. Accounting or accountants maintain financial records. They prepare financial statements such as income statements, such as balance sheets, such as cash flow statements, and then analyze financial data to provide insights to management and the stakeholders. Accounting is a process of identifying, summarizing, recording, classifying, and then interpretation of financial data. You understand? Whereas auditors examine the financial statements and the underlying records, because every financial statements must have supporting records like the invoices, the receipts, the notes, delivery notes, the bank statements. Those are the underlying records or information. So the auditors examine the financial statements like the balance sheet, the income statement, as well as the financial information or the supporting documents, the underlying documents. They examine the financial statements and underlying records. They also assess the effectiveness of internal controls. They test the accuracy of financial information in order to ensure that it complies with accounting standards and regulations. You understand? That is the difference in terms of the process. The two have different stages in carrying out their functions. The auditors and the accountants, their stages are different. The processes are different. The fourth distinction can be on the basis of focus. Focus. Accountants focus on day-to-day operations. The day-to-day operations. They give an account of every transaction on day-to-day basis. When purchases are made, they record. When a sale is made, they record. When they pay expenses, they record. When they pay workers, there is a record. So every transaction that is carried out, every transaction, financial transaction that is done, accountants do so. They record such transactions on day-to-day basis. Accountants focus on the day-to-day operations of the accounting system, ensuring that financial transactions are recorded accurately and they are in compliance with accounting standards. That's a focus day-to-day, all right? Auditors, on the other hand, focus on verifying the accuracy and reliability of financial information, identifying potential errors or fraud. They also assess the effectiveness of internal controls. So their work is not on daily basis like the accountants. The focus is different. They do not record transactions on day-to-day basis, but they examine, they verify the accuracy and the reliability of financial information that is provided by the accountants. You understand? The fifth output. The output of accounting is the presentation of financial statements, which present a picture of an organization's financial position and performance. That is the output of the accounting process. It is a process which begins with the preparation of source documents. It goes on to the recording of the journals, the ledgers. The trial balance is then extracted from the ledgers. Then the financial statements are prepared and presented. So the output of the accounting process is the preparation of financial statements which present a picture of an organization's financial position and performance. Financial position is depicted in the balance sheet and the performance is depicted in the income statement. Do you understand? That is the output. Now for auditing, the output of auditing is the audit report, which includes the auditor's opinion on the fairness of the financial statements and any recommendations for improvement. So the output for accounting process is just the financial statements, the income statement, the cash flow statement, the balance sheets. As for the audit process, the output is the auditor's report, which contains the auditor's opinion. The auditor may also have recommendations to the company where maybe is identified areas of weakness. So candidates, that is the distinction between accounting and auditing. These two can be distinguished on the basis of the definition, the purpose, the process, the focus, and the output. Okay? So accounting is the process of recording and reporting financial information, while auditing is the process of verifying and assessing the accuracy and reliability of that information. So the accountants do the recording and presenting the financial information. The auditors then come after to assess, to examine, to verify the accuracy and reliability of the information that is provided by the accountants. So both functions are essential for ensuring the transparency and credibility of financial reporting. The auditors cannot perform any task unless they rely on the work that is done by the accountants. And auditors are primarily accountants. For one to be an auditor, then one has, first of all, to be an accountant. So auditors are accountants because you cannot verify and ascertain the accuracy of a process that you do not understand. So auditors essentially are accountants, and both functions are essential for ensuring the transparency and also the credibility of financial reporting. So that is the end of the lesson. Assignment 1. What are the fundamental differences between auditing and accounting in terms of their purpose and focus? 2. How do the outputs of accounting and auditing differ? 3. Describe the relationship between accountants and auditors in the financial reporting process. 4. What are the different skills and knowledge required for accounting and auditing professionals? Thank you for attending the lesson. In our next session, we are going to study the types and classification of audits. Bye.